Here in India, the stock market fell today. You may ask, what's so special about that? Markets keep rising and falling. Well, this fall came after a streak of rises, 14 days to be precise. The Nifty made gains for 14 consecutive days. It rose by more than 1,000 points in that time. But today, the rally came to an end. Not by much, though. The Nifty closed 81 points down. The Sensex closed around 200 points down. So let's tackle the obvious question. What led to the correction? Mainly global sentiment. In the US, Nasdaq fell by more than 3% on Tuesday. Dow Jones dropped 1.5%. So Indian markets are tracking the US markets, sort of like mirroring the sentiment. And in the US, the sentiment is bad. There is talk of recession once again. Most experts are pointing to two warnings. The first is the jobs report. In the month of July, America's unemployment rate increased to 4.3%, which is the highest since 2021. Also, the fourth consecutive month of rising joblessness. This usually means trouble. That's the first warning. The second warning is the Treasury yield. The US Treasury issues short-term and long-term bonds. When you buy a bond, you're essentially loaning money to the government. And the government promises you a predetermined interest rate. Normally, the long-term bonds pay better, much like your bank deposits. A long-term deposit gives you more interest than a short-term one. But right now, the opposite is happening. The short-term bond is giving more returns. What does this mean? It means that investors are bracing for a recession. Their economic outlook is not positive, so they're making short-term investments. American bank JP Morgan agrees with this assessment. They think that a recession is very much a possibility, that there is a 35% chance of US recession by the end of this year. And if the US crashes, all of us crash. That's how the global economy is poised at the moment. So is there a way to avoid it? Well, the Federal Reserve is planning a rate cut, their first rate cut in almost 4 years. The hope is that it will kickstart the economy. When interest rates are cut, loans become cheaper, so spending increases, and a recession may be averted. Or so they hope. But coming back to the markets, there is one more factor dragging the markets down: the chip slowdown. Just look at what's happening to Nvidia. Their shares plunged 9.5% on Tuesday. Imagine that, 9.5% down in one trading day. Around $280 billion was wiped out from its market capitalization. $280 billion in a single day. It was the biggest single day loss for a US company. You can blame overvaluation for it. Yes, Nvidia has seen impressive growth, but even that doesn't justify the share prices. Nvidia is up 124% this year. Investors are going crazy about it, but the company is struggling to keep up. You see, their fortunes are linked to artificial intelligence, and the jury is still out on that. AI is consuming a lot of money, but it's not really making profits for anyone, not yet. Most of the big AI firms are running losses. Even Intel dropped on Tuesday by 9%. So the future of AI is uncertain. Now, I know all of this sounds depressing. The US is facing recession, Russia and Israel are fighting wars, China is clashing with its neighbors, and the so-called AI revolution is not paying off. How does a country like India navigate this situation? Maybe by playing to its strengths. The World Bank has some ideas. It is asking India to focus on trade-driven growth, basically to export more things. India is already a leading exporter of IT services and medicines, but the World Bank says diversify. Focus on labor-intensive exports as well, like apparel, leather, textiles, footwear. I'll tell you what the logic is. China used to dominate labor-intensive products, but recently they have upgraded. Beijing is grappling with an aging population, so they're shifting away from labor-intensive production. And who is stepping in? Mostly Bangladesh and Vietnam. The World Bank says that India should also join in. But frankly, it's a question of priority. The government has set aside incentives for these sectors. For example, 6,000 crore rupees for footwear and leather, 10,000 crores for textiles and apparels. So the push is already being made. Guess we'll have to wait for the results. Even in normal times, this would be a challenging task. But amid the current global turmoil, it's proving to be even harder.
Across continents, one powerful news source.
Bringing you diverse perspectives on the issues that matter.
We go beyond the boundaries to give you that little extra about every sporting moment.
So thank you for making Firstpost 5 million strong. We're counting on your support, and you can trust us to bring you the news unfiltered and unvarnished.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for our future. Project One Tree, a News 18 network initiative.
From impeachments to inaugurations, if it's a political story, we are on the scene. The race for the White House is heating up.
Kamala, you're fired.
I say, bring it on.
If it's breaking news, we're live with the latest coverage. From the White House, the State Department, and Capitol Hill. We know the issues, but above all, we know the players to bring you the latest in-depth analysis on all the key stories that we're covering. I'm Eric Ham. Join me from Washington here on Firstpost America.
On the show today, the T20 World Cup bandwagon has moved across to the West Indies. What can you expect from this?
Hello, I'm Alison Green, coming to you from Durban, South Africa. Today we have a special show.
Start with a report on India's shifting nuclear posture. The first time since India officially became a nuclear power.
Hello and welcome to Firstpost America. I'm Eric Ham, coming to you live from the nation's capital, Washington, D.C.